Hey everyone, in this video, I will be discussing two pitfalls that you want to avoid when refinancing your mortgage. Again, my name is Alvin Carlos. I am a certified financial planning professional here at District Capital. We're based here in Washington, D.C. 30-year mortgage rates are at an all-time low. So it's the lowest since 1971 when Freddie Mac started recording the 30-year mortgage rates. It currently stands at 3.33%. To give you an idea on how low that is, back in the 1990s, you will be lucky to have gotten a 7% interest rate. So obviously there's a lot of interest in refinancing right now, and here in our firm, we have helped several clients on that process, whether to help them decide whether or not it makes sense for them to refinance and what the best way of doing it. So I just wanted to share some of my thoughts around that. Back in March, you might have heard that the whole mortgage market was seizing up. So if you're curious to understand what happened back then, so essentially when investors were selling stocks and everything left and right back in March, they were also selling mortgage-backed securities. So to backtrack a little bit, when a mortgage lender gives you a mortgage, they're loaning you the money, typically they will package that loan and sell it to an investor, like a private investor or a hedge fund or Freddie Mac or Fannie Mae. But what happened is no one wanted to buy those mortgage-backed securities anymore. So it was getting clogged up. But the Federal Reserve, the central bank, stepped in and they started buying billions of mortgage-backed securities, and it has helped stabilize the system. Now, on to the two pitfalls that I wanted to share. First pitfall that you want to avoid when refinancing your mortgage is you don't really want to restart the clock to a full 30 years. What I mean by that is if you're already 5 years into your mortgage, you don't want to extend again and pay over 30 years when you would have paid just over 25 years. So in that scenario, you may want to request your lender to amortize the newly refinanced mortgage over 25 years. Because otherwise, if you restart the clock to a full 30 years, you will end up paying significantly more in interest. Pitfall number two is you don't want to pay too much in closing costs. So I've seen lenders charge as much as $5,000 or $6,000. I've seen lenders charge as low as $2,800 or even $2,100 is the lowest I've seen over the past several months. Obviously, you'll need to also factor in customer service and whether they have the ability to customize the loan according to your needs. But here in our firm, we typically connect our clients to mortgage lenders who we've known over the past several years, who know are reasonably priced and will take good care of our clients. Quick math that you can do to help you decide whether or not it's worth paying that several $1,000s in closing cost is this. So let's say with a lower rate that you're getting on your coat, you can potentially save $200 a month. And if the lender is charging you $3,000 in closing costs, so 3,000 divided by 200, that's 15. It'll take you 15 months to recoup that closing cost. So if you're planning to stay in that property for significantly longer than that, then it's a good deal. So that's it, my friends. Two pitfalls you want to avoid. You don't really want us to restart the clock to a full 30 years, and you don't want to pay too much in closing costs. As a closing tip that I wanted to share, my realtor, Ian Le, who works for Long & Foster, if you don't have a realtor yet, I highly recommend her. She is telling me, because I was asking her if it's a buyer's or seller's market, home sales are down, but interest rates are also low. So Ian actually tells me that it is a seller's market. So what's happening is inventory is low because those who want to sell their property are postponing it because of health reasons. They don't want people coming in and exposing themselves with the whole pandemic thing going on. But the buyers in the market are actually serious buyers. They have the cash to make competitive bids. And what happens is you might, if you're a buyer, there's a chance that you're going to get outbid by another buyer who has a more lucrative offer. But if you're a seller right now, then you may want to talk to a realtor and consider that prospect. So that's it, my friends, for today. If you would like assistance in terms of deciding whether or not refinancing your mortgage is right for you, you're welcome to reach out to us. Our website is districtcapitalmanagement.com. Next week, we will be talking about values-based investing. If you're someone who is concerned or have been thinking about doing social responsible investing or impact investing for now, we will be tackling that next week. I actually was talking to one of my good friends and also a client yesterday. He wanted to go fossil fuel free in his IRA. So we created a plan and we executed the plan on going fossil fuel free. So tune in again next week for that. And until then, stay safe.